NKLA is rallying over 20% today in reaction to this 10 battery electric vehicle truck order that they got from JB Hunt. So this is obviously a big deal for the company, and it's the reason why shares are rocketing higher. For its part, JB Hunt said it is committed to helping drive the industry toward a low carbon future and reducing its overall environmental impact. So this is obviously, kind of a signal from JB Hunt that it is going to be investing in EV trucks in the future. And one of those EV truck makers, Nikola, obviously seeing that order. So this is great news for the company. Fundamentally, it shows that there is still customers out there willing to kind of, hatch to the Nikola wagon, if you will. And the company's been under some distress and a bit of a credibility issue after they were caught actually, having their trucks roll down a hill and taking a video of it and manipulating it so it looks as if the truck is running. So that's kind of why their CEO was accused of fraud and actually pled guilty to fraud, was because this company was literally taking trucks and rolling them down a hill and calling it a fully functional truck. So, this is a good sign for the company. It shows that the company's credibility issues are being overlooked. With some companies, JB Hunt being one. So that's definitely this is definitely a huge news for the company, and could be a sign that we could see some other companies kind of, add some orders from Nikola, right? So now that JB Hunt has kind of moved and been one of the first new orders for the company, well, that could, be kind of the tipping point for the company, and we could see more large firms, buy some of these EV trucks or make at least some long-term commitments for Nikola's EV truck. So with that being said, what I'll go over today in this video is I'll go over the chart, give a price prediction on the stock, I'll go over short interest, I'll go over the fundamentals and financials of the company as well at the end. So with that being said, this is not financial advice, but let's dive right in. So I'm going to try to give a price prediction for shares right here. So obviously we bounced off this 200-day moving average at about $2 last week. So that's definitely a good sign for shares to see that we held this daily moving averages, all of these daily moving averages, and then we obviously moved higher. So that implies bullish momentum for the stock. Also, we had the 50-day moving average cross above the 200-day above the 100-day moving average, which anytime you get a lower daily moving average crossing over a higher daily moving average, it signals bullish short-term momentum. So we're getting that bullish short-term momentum signal that hit on Friday, and now we're coming up to test this resistance level at about $2.85. So this is where shares had topped out in July on the 14th. It's also where shares had topped out in late July as well on the 20th and the 19th. Also, this is where shares had topped out in February of this year. Also, where shares had topped out in December of last year. And we've actually seen this level act as support as well in October of 2022. So huge level, major, consolidation around this level. And now that we're coming up to test it as resistance, we could see a short-term pullback off this level, which we're already seeing intraday here. So we basically came up today to test this level and pulled back. Now, in terms of a price prediction for the stock, I'm really going to be waiting for one of two things. So in the first scenario, we could see a move above this resistance level, which would obviously be a bullish signal for shares. And I think as long as we're able to close a daily candle above this 285 resistance level, I think we can move up to about $4 over the coming weeks. And I picked this $4 level. It's not random. I picked it because this is where shares had topped out in November. It's also where shares had topped out in October as well. So this is kind of the next level of significant resistance for the stock. So I think shares could likely move up to this level. But with that being said, we have an earnings report coming up on the 4th. So that is actually this Friday. So that will likely, kind of determine the movement of shares over the coming weeks, is really, how they do fundamentally at earnings. But with that being said, you know, like I said, we could move over this resistance level and move higher to $4 over the coming weeks. Really, another situation which is definitely likely is if we come back down to this 200-day moving average at about $2, hold that DMA, which I think would be likely. So if we reject this level, come down to $2, I think we likely continue higher over the coming weeks and end up at that $4 level, over the coming weeks, either scenario. So that's kind of where I see shares. That's kind of what I'm thinking for shares. Like I said, really just playing those two trading strategies, those two trading plans, you could call it. So in summary, I'm waiting for a move above this resistance level at $4.80. Then I think we would move higher to $4. If we reject this level, I think we'd likely come down to the 200-day moving average and at least move up to this, 285 resistance level. So I would really just want to play the move back down to the 200-day moving average and then a move higher up to 285. And then, you could buy some, or I could buy more shares or calls once we, confirm this resistance level as broken. So that's what I'm looking at for shares. I do think we're not really seeing the volume necessary to break through this level today, so I wouldn't be shocked if we see somewhat of a pullback and some consolidation into earnings, and then a move higher once we come down to the daily moving averages at about $2. So that's how I'm trading the stock, and I'll cover one last thing here. So this screen here shows me which months the stock typically does well in, which months the stock typically does poorly in. So we can see here in July, shares typically rise 7.8%, and then in August, shares typically drop 7.8%. So we kind of have seen this run off of this bullish seasonality trend in June and July, and we could see a decline as we move into the August, September, October, November, and December months, which on average shares typically do drop in those months. So not the end all be all. We only have 4 years of data here, but it is worth at least noting the trends for the stock. With that being said, let's take a look at the short interest for shares. So we can see here that shares actually have a 2 days to cover, which for those that don't know means that it takes 2 days of average volume to cover the shares that are sold short. Typically, when we're looking for a short squeeze, we look for a number over 10 for days to cover. So, sitting at 2, I wouldn't say we're at a super likelihood. We have a super high likelihood of a short squeeze for this stock. But with that being said, the short percent of float is at about 23%, which is definitely significantly very high when you compare it to the rest of the market. So I would say, given the short percent of float, it is somewhat likely that we get a short squeeze. I would give it, kind of a C minus, C to a C, in terms of a likelihood if I had to give it a grade. That being said, let's take a look at the financials for the company and see how the stock compares to the peers. So obviously the company doesn't make money. We're not earnings positive yet, but when we look at a price to book ratio, we have a price to book ratio of 2.4, which for those that don't know basically means that the market cap is 2.4 times the book value of the company. That book value is just, firm assets, equity, or I shouldn't say equity, equipment, property, cash. So this 2.4 number is actually pretty good. It's below the sector median, and it's actually below the company's 5-year average. So the lower this number is, the better here. So to be below the historical average and below the sector median is definitely implying that on a price to book basis, the company is trading cheaply. But with that being said, when we take a look at price to sales, the company traded at a 17 times price to sales ratio, which is significantly above the sector median of 1.4. That being said, though, let's take a look at the company's growth metrics. So obviously, the company is very new. That's why this growth number is at 3,000%. But I do like to see that high number nevertheless, because anytime a company is trading and it doesn't have any earnings, well, the only reason an investment firm would ever pay up for a company like that is for the future expectation of earnings, and that is largely dependent on the company's ability to grow its revenue. So in this scenario here, the company is growing its revenue at a significant pace, so that is somewhat rationalizing those high valuations. With that being said, let's take a look at the profitability numbers for NKLA here. So Seeking Alpha gives this company an F in terms of a profitability score for just as a grade. We can see here that the gross profit margin is actually minus 229%, meaning that the company loses a significant amount of money every single time they make a good or service. That's just what gross profit means. So in this situation, anytime NKLA makes a car and they sell it, they actually lose 229% on that sale. So this is obviously a very, very bad signal for the stock. It kind of tells you that the company, even if it were to 10x its orders, it's still losing money on every single car that it delivers. So it's not really doing much to get more volume. The company really needs to see a massive jump in production and demand so they can obviously scale up their production facilities and kind of be able to use unit economics to get their costs down, right? The more cars that they're able to produce, in theory, should help drive the total cost of production for this company. So that's definitely a number you should be watching here. And when we take a look at NKLA's 5-year average as well, we can see that the 5-year average is at 24% actually, which is pretty solid. It's definitely a solid number for the stock. And then we take a look at cash per share. So there is 20 cents in cash per share for the company, and that obviously could use some improvement. But when you take a look at where the company's trading, that says that there's a little less than 10% of the market cap is in cash. And then let's take a look at how these numbers compare to the peers. So in terms of how these numbers compare to the peers, we can see that for valuation, so in fiscal year three, the company is still expected to not be profitable, trading at a negative 5.6 times PE, which is actually below Rivian's multiple. So it's worse than Rivian. It's also worse than Neo. It's also it's better than Rivian. It's better than Neo, and it's also better than XPEV, and it's also better than Lucid. So I understand that this stock's been beat up, rightfully so, but it's pretty much in line with most EV names. Obviously, Fisker stands out from the crowd, and Tesla, being the leader of the pack there. And then in terms of price to book ratio, the company ranks out pretty well. So the company actually has the second best price to book ratio at 2.4. Only Rivian beats that number. And then when we take a look at growth here, so let's look at the 3-year compounded annual growth rate of 424%. This beats Neo, this beats XPEV, this beats Tesla, this actually even beats Lucid. So on a growth when you look at the growth metrics, kind of in a vacuum here, the company does look pretty solid. And then profitability wise, the company has a negative 229% gross profit margin, which is well below Rivian and well below all the peers. So really standing out kind of in the wrong way here for profitability for this company, which obviously isn't a great sign. And then let's keep moving here. Let's take a look at how the short interest compares to peers. So Fisker short interest is higher, and we're basically in line with Lucid. So in terms of the EV peers, this is the second most shorted name. And then let's look at the balance sheet for the company. So the company has $136 million in cash compared to $348 million in debt. So the company has $212 million more debt than cash, which tells me that the company, since it's not making money, it's obviously burning money. Its net operating cash flow is minus $625 million dollars. So that's kind of what it's taking to run the company here. So given we only have $136 million in cash, you could expect that this company is in a scenario where they may have to, unfortunately, dilute shareholders pretty soon here. So they really have two options, right? Anytime you have to fund your company, you have two options. You can either issue shares, issue equity, right, which would dilute shareholders, or you could issue debt, new debt, right? And given how high rates are right now, I think Nikola is more likely to issue shares and dilute existing shareholders than they are to issue debt. That's probably just a more advantageous venue for financing at this current time for the company. So overall, I think Nikola definitely needs to deliver on some of their promises, and their balance sheet just looks untenable. They really need to kind of see a large fundamental sea change in their valuation. Also, when we look at those profitability numbers, they look frankly quite gross. So to have a profitability number that is minus 229% shows that you really need to kind of improve drastically your method of production for this company, or you're never going to be able to make money on the cars that you sell, right? So they're far from making money on the cars that they sell, not even making money as a company, just simply turning a profit on the cars that they sell. Revenue minus cost of goods sold, not even talking about all the costs associated with running the business. So profitability numbers really need to improve before I kind of jump into shares head first. Growth numbers look solid though. I do want to give the company some credit where it's due. Price to book ratio looks good also, second best number amongst the peers, and valuation looks pretty bad when you look at it in a vacuum, right? But when you compare the valuation relative to peers, it's actually pretty solid. So overall, I really want to see the company move towards profitability. I want to see them improve their gross profit numbers. Also want to see them, kind of decide what they're going to do with that balance sheet, because they're going to have to do something if they're going to issue new debt or if they're going to issue new shares. One of the two is going to happen over the next couple months. That I'm pretty certain of. So that's kind of where I'm thinking for Nikola. I do think this news today though is a great sign for the company, and to have JB Hunt be kind of one of the first companies to start to give this company orders after everything that happened, all of the fraud that occurred at the company. I do think this is a good sign, and it is justified that shares are moving higher. But like I said, we're coming up to that $2.85 resistance level, which I think is likely to reject and come back down to the 200-day moving average. If it doesn't, and we see a move above this resistance level, and we're able to hold one day's worth, or excuse me, we're able to close one candle above this resistance level, though, well, then I will believe that we likely move up to about $4 over the coming weeks. So that's my opinion on Nikola. It's an interesting company, but as I said, I think they need to deliver on some more promises and improve on their profitability numbers before I kind of dive in head first. And like I said in the video, we will get a earnings report from them on Friday. Hopefully, we see some positive developments in those profitability numbers. So that is my opinion on Nikola. If you like the video, please leave a like and subscribe to the channel. I do these company breakdowns all the time. If you would like to suggest a company I should cover, let me know in the comments below as well. But with that being said, I hope you enjoyed the video. I will end it there. If you got some value from this video, please leave a like. We post company breakdowns and important market moving news on this channel on a daily basis, so make sure you are subscribed. If you would like to receive my daily portfolio moves, my exits, my entries, and see how me and my team of analysts are trading the markets, join the Discord through the link in the description below to get our free 7-day trial. Also, if you would like to join our free daily newsletter, sign up to our Substack, which is linked below as well. With that being said, good luck, everyone. Happy trading, happy investing.